Hello, everyone, and welcome to today's webinar, IR35 in the Private Sector, How to Prepare and Protect Your Business.
Hi.
My name is Emily Stringer, and I will be moderating the webinar today. A little background on me. I've been with MBO for 8.5 years, working as a consultant services advisor. Here at MBO, we are contractor compliance specialists and are chosen compliance partners for the world's most iconic brands, including a third of the Fortune 100. Through our service-based solutions and supporting software, we have been helping large enterprise clients navigate the complexities of engaging independent talent for over 20 years. Now for some housekeeping on today's webinar setup. First and foremost, you can see the controls listed here. Secondly, we will be emailing a slide deck and a recorded copy of the entire webinar to all registrants within the next week. Last, we encourage you to use the questions field throughout the presentation for a Q&A at the end of our hour together. Any questions that we do not get to will be addressed via email after the presentation. If you want to follow the presentation on Twitter, use hashtag MBOWeb to submit your questions and comments at MBO Partners. At this time, it is my pleasure to introduce you to MBO UK's Managing Director, Fergal Lennon. Fergal is an experienced MD, FD, and business entrepreneur with over 25 years of business achievements in accounting practice and in the professional services industry. He has a proven business and accounting background with multinational companies in the UK. Fergal's leadership and vision have been instrumental in positioning MBO Partners as the market leader in independent contractor compliance for corporate clients in the UK. Fergal, at this time, I'll turn it over to you.
Thank you, Emily, and welcome everyone to today's webinar. As Emily said, the title of our webinar is IR35 and the Private Sector, How to Prepare and Protect Your Business. I will be joined by two speakers, Kevin Barrow of the legal firm Osborne Clarke will give a legal update on changes and risks from a legal point of view and the impact of them. And my colleague Mark Stringer will then share with us 5 tangible ways to prepare for these changes. And I suppose if we look at it, IR35 has been around for nearly 20 years. And the changes that were announced in the budget recently mean that the way that it will be policed has changed significantly and will change significantly from April 2020. Now, these changes have been in the public sector since 2017, but at a high level, what it's going to mean for companies that engage independent contractors is that the responsibility of classifying the contractor, whether they are really in a business-to-business relationship or should be paid as an employee, will now be with the user of the independent contractors. So previously, that classification was done by the personal service company themselves. And Kevin will go into this in more detail later on. But this change is very significant for businesses because it puts the risk to the end user. It transfers the risk for the end user. And this is something that has been flagged for some time by HMRC, and they obviously have moved into the public sector with this a number of years ago, but it was well signposted that this was going to move into the private sector. The one good thing about this in terms of news, and the good news, is that they did delay it until April 2020, which gives businesses time to get prepared. And businesses will need to use that time because there's those businesses that have a lot of independent workers and rely on independent workers will need to make significant changes and will need that time to help them to be ready for April 2020. with that, as I said, I'm joined by Kevin Barrow, who is our legal advisor at MBO Partners. And Kevin is a partner at international law firm Osborne Clarke, and he is a leading expert on the contingent workforce. He has advised on 25 to 50 MSP and RPO programs per annum, advising staffing companies and MSP programs in 45 countries. He's been involved in all of the major consultations with HMRC going back since the start of IR35 when it was introduced 20 years ago, and the Cabinet Office consultations, also the Taylor report. He had meetings with Matthew Taylor in relation to that, and also Kevin and his team are the partners of the staffing industry analysts for the UK and Europe. So with that, I'll hand you over to Kevin.
Well, thank you very much, Fergal. The thing I'm here to talk about is the tax developments affecting users of contingent workers in the UK. I'd like to start off by, putting some context on this. As I think everyone involved in engaging contingent workers is aware, there's a lot of focus on the whole world of gig working and the gig economy and flexible workforces and agency workers. And it looks like various things are going to happen, even without a focus on the tax that might be due from them or in respect of them. Certainly one thing we're picking up is that, politicians are focusing on why voters appear to be angry and voting for various things that might otherwise not have been voted for. And, they're focusing on the casualisation of jobs, the precariousness of incomes, and they're looking in part at the growth in flexible workforces and use of contingent workers as being a contributor to that. Alongside that, you'll have all seen the reported cases, lots of media coverage of cases involving Uber, Sports Direct, Deliveroo, and the list goes on. And the government has many potential responses to that. Some of the responses could involve requiring employers to reskill workers affected by the growth of artificial intelligence and various types of automation in the workplace. Other types of employment protection relating to people who are moving into a more flexible role. Focus on how young people can get mortgages if they're working on a sort of gig worker type basis. All of this sort of thing has been covered by the Taylor Review, and The Guardian leaked last month some proposals to in some areas, which I won't go into now. I suppose the final point I'd make in relation to the general context about the use of contingent workers is that Sir David Metcalfe, head of the Labour Market Enforcement Authority, has recently said that in his view, and he's not talking about tax, he's talking about all other types of liabilities that might be owed to these workers. He said joint liability should be introduced to ensure that lead firms, which means end users, bear some responsibility for what goes on in their supply chain. And he's referring to things like national minimum wage, holiday pay, you name it. So that's the direction of travel. And it looks possibly that like HMRC will be involved in enforcing holiday pay as well as tax, by the way. And in all of that, there's not much credit given to the fact that actually quite a lot of workers seem to actually like working on a contingent or flexible basis, and quite a lot of employers, that's how they're growing and how they're giving people increased opportunities of earnings. That there isn't much coverage of that. So that's the general context. But what about tax? Well, alongside this, there is a definite move worldwide in relation to the increasing use of non-standard employment models, it's still the case that in most countries, or at least countries which don't have huge oil wealth, the most government revenue is still mainly collected via workplace taxes, which in the UK means PAYE and NICs. And it hasn't escaped the attention of treasuries around the world that if more and more people don't work as traditional employees, then it won't be so easy to collect this main tax that most countries rely on. And that's led to all sorts of actions around the world. The UK is not alone. So, those who follow the US will be aware of, substantial worker misclassification claims that major companies suffer from time to time. There's stuff going on in Germany. We've dealt with some very large claims in Germany by usually relating to social security and pensions rather than tax, but it all arises from the same thing. And similarly across the rest of Europe. And in fact, we've just started a big one in Belgium. So, this is something going on around the world, and then the UK has come to the party. As Fergal flagged, it's been mentioned over many years that there should be some sort of action to attack the tax status of independent contractors, usually operating via a personal service company in the UK. And the 2018 budget announced that there would be an extension or a substantial amendment to IR35 from April 2020. So what is the current position, even before we look at what the future position will be? Well, the reason why the Chancellor's announcement in November about rolling out IR35 changes in the private sector from 2020 was, big news is that historically the risk profile for end users, for hirers of contingent workers in the UK, has been very low. We're a benign environment for the engagement of independent contractors compared with nearly everywhere else in the developed world. And that's because the main tax measure, the current IR35 regime in the private sector, basically makes the contractor liable and end users have very, very rarely any risk. They can just turn, if you don't mind me saying, a knowing blind eye to what goes on in their supply chain without any risk of claims by HMRC. HMRC has to pursue the individual contractors. Now, there are some exceptions to this, but they're relatively rarely invoked by the authorities. Just to flag up though to people listening into this, there are some claims, starting perhaps with the bottom one on that slide. We have seen a number of major companies receive Regulation 80 assessments in the last couple of years relating to contractors who were paying themselves via some sort of offshore entity. And under the existing legislation, that liability can pass up to the hirer. There are various other sort of liabilities that can apply under the intermediaries legislation. If you're paying someone as a personal service company, it actually turns out that their company hasn't been incorporated, you may be liable. And under the MSC legislation, if you encourage people into personal service company arrangements rather than just letting them make their own decision, you could be liable. All of these things, could on rare occasions expose you to liability. It doesn't happen very often. So low risk at the moment, but the government is fed up, they've been flagging for some time they're going to be doing something. It started, the recent trend probably started in November 2016. HMRC issued guidance for users of labour, which said you've got to check your suppliers out. You cannot turn a blind eye to tax and or national minimum wage breaches in your supply chain. And I've pasted in the link to the government website which explains that. Now that's just guidance, it's not law, but obviously if HMRC find that you're not doing anything, they could start making your life a bit difficult. So that's the current position on HMRC's sort of attitude. What else is happening? Well, in September 2017, even before there are these private sector IR35 reforms, the government introduced the Criminal Finances Act, which makes it a criminal offence for end users, to fail to prevent tax evasion in their supply chain. There is a defence for them if they can show they've taken reasonable steps to prevent that tax evasion, then they won't be liable. But that means they have to carry out those reasonable steps. And if they haven't carried out those reasonable steps, then they will be liable, even if they don't know about the tax evasion and even if they haven't directly benefited from it. And that's an unlimited fine, and it is a criminal offence, not for the directors, but for the company. That means you have to carry out checks if you're an end user of your major suppliers, and if you're paying people overseas via payroll partners, of those payroll partners. It's something that a lot of companies are now taking very seriously. Another measure that came into force towards the end of last year, because this is all coming at us in a bit of a rush, was what's often called the enabling legislation, which makes you liable, but this isn't criminal, this is civil liability, if you enable a contractor to sign up to some sort of tax avoidance scheme. What does enable mean? It's communicating any information about arrangements. And we see this more actually in the commercial industrial end of the market, where you've got blue collar workers turning up on site and being told by the site owner, right, well, sign up to this, sign this contract here for this umbrella and they'll sort you out. Well, if that umbrella is then doing some sort of aggressive tax avoidance, the November 2017 legislation could make the end user liable just because it's passed over the papers. So that's the existing position, which is already, a bit more than it was 3 or 4 years ago in terms of risk for end users. What about the IR35 changes that we're now hearing about? Well, as Fergal said, it's been flagged for some time. And the figure that has been sort of given for the potential annual cost to the Treasury of not taking action is 1.2 billion. I noticed they've actually increased that to 1.3 billion pounds per annum just recently. And governments generally, if they identify a loss like that, don't tend to ignore it. They take action, not least because if they don't take action, then whatever party is in opposition will say they're soft on tax avoidance. And there is a perception that because changes were made in this whole area of IR35 in April 2017 for the public sector is now having to probably pay more for its contingent workers because of the new tax burden there under the new IR35 reforms there, and that's just not fair. That seems not fair. So it looks like something's going to happen, and indeed that's what was announced in the budget this year a month ago. There is an exemption for small companies, which means if you're an end user with fewer than 50 employees and roughly 10 million turnover or £4 million balance sheet strength, then these rules will not apply to you if you're a user of contingent workers, and the old IR35 regime will continue to apply, which means that the contractors are liable, not anyone higher up the chain. But I'm sort of guessing, having had a quick look at the names of the companies on this webinar, attending this webinar, that none of you would fall within that exemption. Personally, I'm not sure that exemption will actually be followed through with in the final legislation, because it's it looks to me like it's a classic way people will find for avoiding the regime. So how will the new regime work? Well, we think it's likely to mimic the public sector IR35 regime that was introduced in April 2017. That means that, well, really, in many cases, the staffing company or intermediary will be primarily liable for PAYE and NICs in respect of any contingent worker operating on a personal service company basis who fails the IR35 test. But the legislation makes it clear that the end user will be liable instead of the staffing company or intermediary if the worker is actually inside IR35, so fails the IR35 test, which, as many of you will know, is just a basic employment status test. But nevertheless, the worker is paid gross, and the end user has failed to communicate to the staffing company its assessment of whether or not someone is inside IR35. So under this new regime, the end user will be obliged to carry out an assessment and to communicate that assessment to the intermediary via which it engages the personal service company. If it fails to do that and the person is then paid outside IR35, i.e. they're paid gross without any deduction of PAY and NICs, and they actually fail the IR35 test, then the end user is liable. Equally, the end user is liable if it carries out an assessment and just gets it wrong. As a result of which, the intermediary below it pays the worker in good faith without deducting POI and NICs. A third way in which end users can be liable is if they assess someone as inside IR35 and they say to the intermediary or staffing company below, we think they're inside IR35, and the staffing company or intermediary says, okay, but can you tell us within 31 days why? And if the end user fails to give reasons for why it's assessed someone as inside IR35, then the end user will be liable. And what happens if there's no intermediary? Well, in that case, you know, it's the end user just has to make, if it's directly engaging personal service company contractors, then the end user will be primarily liable and just has to get it right, has to make the right assessment, and can't expect anyone else to take the hits. So we saw these changes broadly being rolled out in the public sector in April 2017. We were heavily involved in that, and we advised, I don't know how many different entities about it, but it was a lot. How did the market respond? And does this give any clues to how people involved in this webinar will, you know, respond, or, you know, what experiences they will have in April 2020? Well, the thing that got a lot of publicity, and perhaps, you know, people listening in will think, well, of course this is going to happen, was a lot of blanket assessments on a safety first basis that everyone, all contingent workers, were inside, all personal service companies were inside IR35, and that was communicated to any intermediaries, and the intermediaries just had to make the deductions, or, you know, find some other way of engaging the workers. That did work in the public sector, certainly, for a lot of the volume. So loads of nurses, loads of teachers, loads of care workers were arguably inappropriately operating via personal service companies, and there were just blanket assessments from the relevant public sector body saying, well, not anymore, you can't, you are inside IR35. And not many of them argued. I mean, there's possibly an argument that community nurses are outside, but broadly speaking, hard to argue. And they just took it on the chin, except for something I'll mention in a second. But for the contractors who had sort of transferable skills and could work in the private sector, they tended to argue their case, or the intermediaries via which they worked argued their case, and there was some giving way by public sector entities who said, okay, we won't just be blanket, everyone is inside with them, because otherwise we're going to lose the talent to someone else. We're going to have a chat, we're going to have to look at our assessments, and a number of them were eventually assessed as inside IR35 or not within the IR35 regime at all. Were there lots of challenges? I've mentioned that the legislation does allow for challenges by staffing companies. In fact, in the public sector, there weren't many. Staffing companies didn't ask for explanations of why the assessment was made. I think they felt that the end users just wouldn't make any difference. It wasn't worth the bother. We think that in the private sector, there will be more challenges. And there are already signs that people are gearing themselves up to do that. The other thing that's worth noting about how the IR35 measures may work in the private sector is that the government proposal set out in the summary of responses from HMRC on 29th October 2018, issued at the time of the budget, has said that the legislation may be changed for the private sector so that end users are effectively not allowed to do a blanket approach. They've actually got to exercise care when assessing someone as inside, as well as obviously not recklessly assessing people as outside. So what else happened? Well, contractors like these nurses we've just mentioned, who had been operating through personal service companies, didn't always just take it on the chin. They were then, instead of just accepting they should have PAY and NICs deducted, they were seduced into a range of completely implausible, highly aggressive tax avoidance schemes. I'm not saying every single nurse in the country is doing this, but a very high number, a surprisingly high number, have been seduced into some very dodgy schemes. Offshore elements, loan elements. I don't want to go into the detail of it. You can look on HMRC's website for some of the details. We think that will happen in the private sector as well, and people involved in introducing, preparing their companies for IR35 are going to have to put in place not just measures to comply with IR35, but measures to prevent use by their contractors and their supply chain of worse schemes. Because don't forget, the Criminal Finances Act and other measures could make you liable for those schemes, not just for IR35 compliance. Another thing, of course, that people will have seen in the press, no doubt, is, and exemplified by the BBC stories, in the public sector, there were a number of people who had been operating as personal service companies up to April 2017, who the day after the legislation changed were assessed as inside by their employers who'd never taken an interest before. That exposed those the BBC presenters to retrospective claims by HMRC who effectively were able to say, well, we now know from your end user that you are inside IR35. That means that the end user is liable from April 2017 to deduct PAY and NICs. And the BBC said, yeah, no worries, we'll do that. But of course, what's happened is the BBC has issued a determination, an assessment, which can be used in tax tribunal proceedings by HMRC to say, well, if they are inside IR35 now and the BBC is paying up now. Well, they were inside for all of the time before when they weren't, when the contractor was liable but wasn't paying any tax. And that's what's led to a lot of these BBC type claims that you will have read about. Now, that could happen in the private sector as well. And one thing you need to watch out for is what we call straddle risk. Try now, even 18 months out, not to be appointing contractors to assignments which could extend beyond April 2020. They've all got to have natural expiry dates in February, March 2020, so that you can issue something new from April 2020, which doesn't necessarily expose anyone to retrospective claims. So next slide, please. Yeah, what else has happened in the public sector? Well, we saw what we
think we've just lost you, Kevin. I'll just continue on. Well,
who come in and will become contractual intermediaries in the supply chain below the end user and say, look, we will become the person who's primarily liable under IR35. We'll carry out an assessment on behalf of the end user of the status, IR35 status of the workers, and will effectively minimize all risks relating to IR35. There's a lot of interest in that. There have been some people looking at that on a sort of fairly more or less amateurish basis in the public sector, but we think that will get ramped up massively when the regime is flowed out into the private sector. Alongside that, we're seeing a lot of contractors move to genuine statement of work type supply arrangements. So historically, personal service company contractors could just work on a time and materials basis, not really take much business risk, be not really in many ways be seen to be a real independent contractor. Working, without using discretion and not under the control or supervision of the end user. What we're seeing is many now looking at moving away from that towards output-based contracts where they get paid some or all of their fee based on successful delivery of the project rather than just on timesheets and stuff like that. There's going to be a big growth in that. In addition, we're just picking up that lots of consultancies, including the big four, are suddenly realizing that this hugely affects their business model. They're big users of personal service company contractors, quite understandably. It's been a great model, but obviously where they're supplying contractors to work for end users and effectively it's just a labor supply via them, then they will be caught by this regime and they will have to assess whether someone is inside or outside IR35 and probably have to deduct PA1 and NICs, which could put up their costs of supply significantly. Unless, of course, the personal service company contractors are prepared to take a hit and reduce their take-home pay. But many of them are saying, look, unless I can have the same take-home pay, I'm going to another end user, I'm going to another intermediary who will treat me as outside IR35. Generally, we do think the use of personal service companies in the private sector will continue after April 2020. Perhaps not so much for lower skilled workers. And what we've seen in the public sector is a lot of those, unless they go into these very dodgy aggressive tax avoidance schemes, we've seen them. Some staffing companies have started employing them. We've seen direct engagement models crop up, especially in the NHS, so that VAT is avoided. So even if more PA1 and NICs is having to be paid, if the VAT is avoided, then everyone in the supply chain can sort of reduce the impact of the loss of, loss of take-home pay. And yes, a lot of workers in the public sector have moved to, a PAYE basis of working. So that finishes me off. Takeaways, major takeaways. This is coming. There's no political opposition to it, really. The UK has been a relatively benign environment for the use of personal service companies and other types of contingent workers, but that is changing. You can do something about it, but you need to start doing something now. We're seeing a lot of activity already. So thank you very much, and over to you, Fergal.
Thank you, Kevin, for that very informative talk. We've had some questions about getting a recording of this, and just to let everyone know that a recording will be sent out to people who are attending this webinar. We're also going into a lot more detail. MBO Partners are going to release a white paper in the coming weeks in relation to this, and that will be made available to people as well. But what I want to do now is to move on to our next speaker, who will speak about the tangible ways for businesses to prepare for IR35. So the speaker is my colleague, Mark Stringer, who is the Business Development Director at MBO Partners. He has over 10 years of experience in the contractor compliance and recruitment sectors. He's been overseeing programs in the UK and in Europe, and is now helping enterprises to navigate the IR35 changes. Now, Mark has made some effort to be here. His baby boy arrived early, about 36 hours ago, so we're glad to have you here, Mark. And with that, I'll hand over to you.
Thanks, Fergal. Thanks a lot. So, welcome everybody. So, as Kevin's indicated here, the contingent workforce, the landscape's going to be a very different experience for both the contractors and the businesses that engage them between now and 2020. The legislation means that large changes in business, and these aren't changes that can be started in January 2020. They require planning to start now. Now, to give you briefly a bit of background about sort of MBO Partners for those that aren't aware, from our offices in London, we've been working with UK businesses to really help them prepare for IR35 for over 2 years now. And we have fully operational programs that apply IR35 principles to the engagement of their contractors. Traditionally, though, we have over 2 decades of experience operating in America. And for those that aren't aware, the legislation, as referenced, is much tighter out there, with considerable risk already falling on end clients, and has done for many years. So what that sort of really means from our sort of perspective is that we've got experience with these sort of legislative changes, and we're operating in markets that's had them in place for many, many years. Now, from your perspective as clients, you've got different ways to choose how you handle the IR35 risk. So what I'm going to do here is really cover some, dare I say, typical stages that clients have either been through or going through at the moment with our help. So this is going to be covered in more detail in the white paper. But what we've done is breaking this down into sort of 5 key areas. So form a project team, conduct internal audits, create guidelines for engaging independent contractors, make sure independent contractors are properly classified, and have a written contract. So in terms of forming a project team, now some of the job areas here are obvious. So I'm not going to sort of spend too long sort of going over these points, but a point to make a reference to is, whilst not all of the project team might need to attend every single meeting, it is vital that you have the resources ready as and when they're needed. The 2 sort of points I want to draw attention to, the first one, the project lead or the contingent workforce program manager. Now, they don't have to be the same. You might not have a CW program manager in place yet, but what you do need, and what is vital for this, is you have somebody who's responsible for driving the project forward. And it usually, from our experience, works better if they are senior enough within the business to give it some gravitas. The other sort of aspect I want to sort of hammer home is the internal senior level sponsorship. So, I mean, I can't stipulate enough the importance of getting senior level buy-in for this. The biggest sort of bottleneck that we tend to experience usually involves people and your sort of internal or clients' internal aspects of change management. Compliance does mean change, and people will always be resistant to that. So having someone who's senior to really help drive this through is really critical. Just next slide, please. Now, conducting internal audits. Now, this can appear to be a daunting task, but first of all, don't worry. As Kevin made reference to, this isn't just about sort of IR35. If you're looking at the sort of criminal finance as well, that's often what's keeping clients awake at night. So what we have sort of experienced is a lot of our clients are using this added risk to their CW program as a way to really either mandate the program or roll it out wider, or just tighten up the general policies and procedures in place, because it's added an additional element to the contingent workforce. So rather than it just being responsible for sourcing the best talent, there's now an added element of minimising the risk involved with here. Regardless really of your sort of life cycle or the maturity of your contingent workforce program, you will have independent contractors that are engaging with your business in undetected ways. Now, it could be through a disguised statement of work, which Kevin made reference to earlier. It could be through non-PSL agencies, or it could be through a management consultancy where you don't even realise you have an independent contractor working there. And analysing your data is really going to be able to help you identify these contractors, but it really needs to be a part of the process where you're looking at closing these potential sort of backdoors well in advance of the IR35 legislation come into play. But whilst you're looking at sort of identifying your data, you're looking at what sources you're going to use, who's going to be responsible, etc. Another sort of aspect that you need to sort of bear in mind is really segmenting your workforce. So internally, and I make reference to it just internally here, you'll need to identify the business critical contractors. Once you've sort of done this, you'll also need to identify if they sort of fall into three sort of areas, or if you excuse the terminology, buckets. You know, are they likely to fall inside of IR35? Are they in a bit of a grey area, or are they to fall or likely to fall outside of IR35? Because what this will allow you to start doing is having the conversations with finance well in advance for instance, the likely inside contractors. What are the process you're going to have to do, and what's the discussions or conversations around the associated costs of a gross up price increase here to ensure that they aren't worse off? If they're business critical, you're going to want to keep them. You know, and what are those costs going to be to your business, and what's the process you're going to have to follow to get those signed off? For the contractors that fall into the grey areas, you can start discussing, are you going to have a price increase with them as well? Or are you going to move the engagement more outside of IR35? So as Kevin made a reference to now, moving it into more of an SOW structure. But there's all things you want to have a look at. But from this sort of aspect, it gives you a lot of sort of insight into the wider sort of market. If you go on to the next slide, please. So creating guidelines for engaging independent contractors. Now, depending on what the policies or procedures you already have in place, the likelihood is that you are going to have to develop new policies. So when doing so, you have to sort of look at three aspects. They need to promote enterprise-wide consistency. They need to help minimize financial and legal risk. And they also need to improve efficiency, which is often sort of part that sort of falls aside. For instance, giving you, there's a tendency in the UK to treat independent contractors the same as your more temp-based contractors, or even your sort of permanent people. This isn't best practice, and this will have to sort of change going forward. You need to sort of consider, are you going to look at a behavioural control policy? You know, should this be communicated? Should it be developed? Sorry, how are you going to communicate it with the stakeholders and training? We've got Christmas looming, for instance. Are all of your independent contractors going to the Christmas party? You know, it's things to look at externally from that. Another sort of aspect to consider is for your new contractors, are you going to start developing a policy on how you're going to start engaging them? You know, drafting initial guidelines of who falls inside and outside of scope. Will it just be PSCs, or are you going to start including companies that have 2, 3, or 4 less employees, for instance? So this will sort of help save time from carrying out more detailed to the classification on contractors you knew that are or know that are likely to fall inside going forward. And the final sort of aspect to sort of consider is are you going to develop policies around a sign-off procedure? You know, so how are you going to utilize these to really help shut the back door that currently in contractors are being engaged through? And this will help sort of tighten up rogue spend. But in a sort of a summary, in order to sort of drive compliance, strong policies and procedures, and also communicating them effectively will help enormously. If you go on to the next slide, please. But making sure independent contractors are properly classified. So classification policies will help minimize risk, and engagement policy will help reduce cost and time on your new contractors. But something to bear in mind is you need to assess all factors affecting independent contractors' engagement. So a one-off assessment at the front end, asking a few questions, an online portal isn't sufficient. You have to look at the various different sort of aspects involved in the life cycle of that contract, the day-to-day sort of aspects of it. It's not an easy task. You know, there are a number of sort of nuances around this, but you do have different sort of options available to you. Internally, are you going to look at the HMRC CES tool, which I'm sure you're all aware of? You know, because as a business, as Kevin indicated, you will have a statutory obligation now to carry out an individual assessment on the IR35 status of all contractors where you're using their services. So be it of any talent stream into the business, you will be responsible for the assessment of those. And if you are going to use it internally, you need to look at who's going to carry out these duties. Is it going to be HR, legal, hiring manager? Bearing in mind that you're likely to get different responses from each. You have to understand how you're going to approach and coordinate assessments, as well as looking for the management of those, not just from a one-off perspective, but also from an ongoing arrangement as well, to ensure that you minimize your risk. Have the next slide, please. The other option is to outsource it to a business such as MBO Partners, but basically any sort of outsource provider will be able to fulfill your statutory obligation, so they'll be able to fulfill it on your behalf, and it gives you an opportunity to minimize the risks and liabilities, and typically they should be providing insurance-backed indemnities, and this will allow you to sort of have a scalable sort of outsourced option. Within that, there typically is 2 sort of options available for you. The intermediary can operate as a fee payer, i.e. inside the chain, with the money flowing through the contract, through the intermediary, or they can operate as more of a compliance partner, which means they'd be sitting outside of the chain, wouldn't have any structural changes to your current relationships. So your tier 1 recruitment consultancies, for instance, would still own the engagement, etc. But they're the sort of a couple of fairly sort of standard options for you. Next slide, please. So regardless of what options you're going to choose with on how to handle your IR35 risk, what we've done here is put through a 3-stage tier with some sort of timescales that you need to sort of look at. So the first sort of phase, really, you want to be sort of completing this by the end of Q1 2019. And this is where you implement your policies and procedures really to small sort of pilot populations. It's going to give you the opportunity to really assess the nuances of the contractors, better understand the challenges, but also gives you a useful opportunity to really stress test the processes you've got in place. Now, phase 2, Q2, you really want to be getting this sort of implemented. You've got less than 12 months unless the legislation comes into play. But you want to sort of adopt this initially under more sort of controllable talent streams. So you want to look at your tier 1 vendors, your tier 1 PSL recruiters, any management consultancies that you use frequently, anyone that you've got good relationships with. But this will allow you to sort of identify the wider sort of bottlenecks or kinks in the process, and really start to closing the back doors that you've identified in the audit. But this will be really around where you want to start incorporating your incumbents and then widening that sort of process out. So phase 3, Q4 2019. So really you want to be aiming to finish this by the end of sort of 2019 to give you that sort of flexibility to adapt and any sort of changes that aren't really picked up in the first sort of run. The policies and procedures should really start to feel more like standard practice by now, and it will give you a chance to really reassess those back doors, but also see if any more have arisen. You know, you've implemented new policies and procedures. Traditionally, people find ways around that. Has that sort of opened your business up to risk? And these all need to be reassessed. You also need to have a continual process of re-educating your internal teams so they fully understand the risk here as well as the process to follow. But a good point to sort of mention is, you know, governance really is key here. Whether you're using an internal structure, whether you're using an outsourced model, they can only ever assess people that they get their hands on. So people have to be funneled into this program. Take us on to the next slide, please. So in terms of a written contract, now contracts are an interesting one. Even with the current legislation, majority of businesses will have some form of IR35 friendly contract. Contracts are going to have to change from an overview perspective. There's a number of sort of different considerations that you need to bear in mind. There's going to be changing relationships, there's changing engagement models, there's new payment models, there's increased risk and liabilities that need to be accounted for. You need to sort of look at, do you have contracts in place for deemed payments, etc., etc. And this is all sort of fair and well, but what has become evident from, if you look at a lot of sort of recent case law, is that if the day-to-day operational aspects don't match what is written in the contract, the day-to-day aspects will take precedence. So this brings up some sort of interesting sort of points. Risk is a very good indicator that it's a business-to-business relationship and would therefore operate outside of IR35. But that risk has to be real. It cannot only exist in the contract. If you're looking, for instance, at the risk to the contractor, if you have written in your contract that it is their responsibility to make good any unsatisfactory work that's delivered past deadline or just not up to the standards, does your business actually enforce it? Has they enforced it, or is it just there in a clause? You know, the risk of substitution, the right of substitution, sorry, is another one to consider. How does your business account for this risk? Is it just in your contract? Do you have examples where you have actually allowed a substitution? Is it workable? What processes do you have to support it? And do you having different contracts in place that allow you to engage people that are or do operate right of substitution and those that don't? Control is another sort of aspect. So there actually flexibility on how the work is performed, or do your contracts still say 9 to 5:30 must be on site? Yeah, and if they are allowed to work flexibly, again, how does your business facilitate that? How does that work? How do you enable your contractor to do so? Statement of work. Now, the statement of work is probably one of the biggest sort of subjects that's certainly been discussed with us since the announcement of this sort of legislation. What we do find when we're reviewing a lot of our contracts is contractors are hidden within uncompliant statement of work. You know, are your statement of work actually deliverable based? You know, can a clearly designed deliverable actually be articulated? And are the contractors paid to these? If they're not, I would be questioning whether this is a legitimate statement of work. But a efficiently run statement of work can provide enough risk for contractors to be operating outside of IR35. That's, if you'd like to take on to the next slide, please. So just to sort of overview here, some of the sort of critical success factors that we've sort of highlight. First of all, start now. You know, sticking your head in the sand will not work with this legislation. You cannot wait. There's a lot of work to be done here. Senior level buying is key. I still speak to contractors all the time where this is an ongoing challenge. The people part of the process is probably the biggest challenge to date. Track, measure your progress. If you don't track it, you don't know how well you're doing. Communication, a strict communication policy, communicating this changes to your business, probably more overly communicating it will be vital in making this a success. And also look at scalability. Whatever you're implementing has to be scalable. Can your program scale and adapt to the likely changes? That's me over. Thank you for listening to this sort of section of it, and I'll pass you back to Fergal for any of your questions.
Thank you, Mark, for all that information. And just to let people know that they will receive a recording by email on Friday. We have had a number of questions in and a number of comments in, so thank you all for doing that. And any ones that we don't get to, we will respond to individually after. One question, though, that has come through, and what I will do perhaps is for you, Mark, first, and then move it on to Kevin, perhaps, that you might be able to answer. What are the biggest challenges clients are facing to prepare for the changes? So,
I suppose from our sort of perspective, I mean, still the senior level buying is still a sort of a critical sort of element. It's the people that are quite often resistant to the change. That's probably one of the biggest parts. Getting the processes and systems you can put in place can be tightened. It's getting the change management is probably the biggest challenge internally that I'm seeing from my side.
I agree. I agree with that and those 2 points. Plus, I think if people are looking at genuine statements of work as a way of keeping people outside IR35 so that they can continue to be paid on a tax efficient basis and so that end users don't have to gross up pay rates, a lot of work has to be done. You really have to do a lot of work to re-engineer supply models so that it's genuine statement of work. So don't underestimate how much work that is, but it is definitely worth looking at. It's just you need to do it properly.
And thank you, Kevin. Another question for you, Kevin. What is your experience for what are companies doing in your experience to prepare for this? I know it's only literally a month announcement.
No. Well, we're seeing it's, some of them, the ones I've seen anyway, are doing some of the things that Mark mentioned. They're getting teams together to assess what their opportunities are, what they should be doing. They're trying to work out, where their contractors are, including what Mark said, all of these consultancies and stuff like that. So they're beginning to take steps. And I think one of the reasons they're doing that is that the more sophisticated ones are aware that if they don't start announcing their plans fairly soon and appearing reasonably attractive to contractors will leave and go to an end user where it looks like they're going to be able to operate outside IR35 after April 2020. And also people are worried about if they don't take steps now, contractors might be seduced into some of these very aggressive schemes, which, make no mistake, they are beginning to be approached about. The providers of these schemes are already out there trying to find new candidates to go through dodgy schemes. And if the end users don't put things in place now, they're going to lose people even before April 2020 to dodgy schemes or to competitors.
Yeah, thank you. And a question for you, Mark. What are the priorities to make this a success in terms of preparing?
It would be the senior level buy-in, the making sure that you've got the scalable program, making sure you've got the right team in place.
Mark,
Thank you.
Kevin, Fergal, thank you all so much for the valuable content that we've delivered today. Such a great presentation, so informative. I know our audience really appreciates everything that we've been able to share. With that said, we are going to put a quick poll up on the screen so that we can ensure we are routing the correct information to the correct folks. Would you like more information about IR35 from MBO Partners UK? Yes or no? We will give everyone about 30 seconds to chime in here so that we can get this information distributed. So we'll leave this up on the screen for about 10 more seconds. Looks like we are 50% voted.
And while that's up there, Emily, I might just mention again to people about the white paper, because we're up at the hour now. I think we're nearly ready to finish, that we will be preparing the white paper, which will be in more detail on what we've discussed today, and that will be available in the coming weeks. And also to apologize for the builder who chose to start work at 1 o'clock right when we were starting, in terms of the interference at the very start of our webinar. Thank you all.
Great. Thank you everyone for joining us, and to our wonderful participants here today. Really appreciate sharing the information. Thank you.